2025 wasn't just another slow year in Toronto real estate. It was the year the market finally cracked. Prices didn't just soften, they reset. Inventory piled up, buyers pulled back, and everyone felt the pain, especially the suburbs. In today's video, I'm not just giving you the December market update, I'm breaking down what happened in Toronto and the GTA over 2025. We'll talk about why the 905 got hit harder than the core and what the numbers are really telling us moving into 2026. So if you're thinking about buying or selling in the near future, or you're just curious about the market, this should help. Let's get into it. Starting with freehold homes. That's detached, semi-detached, and townhomes. Because that's where a lot of people thought prices would stay safe, and with good reason, because up till recently they really had, but not any longer. Detached homes in the city of Toronto finished 2025 almost 8% down year over year. To put that into real numbers, a home that was selling for $1.7 million last year sold for $1.55 this year. And in many cases, sellers are continuing to chase the market down if they haven't had a chance to sell. And entry-level freehold homes, that's semis and townholds, fared slightly better but still declined. These properties are down 6 to 6.5% from last year. So what was selling for maybe $1.23 million is now selling for $1.1. So yes, they are more affordable, but make no mistake, that is a meaningful correction for sellers. But where things get interesting and where a lot of people didn't necessarily expect to see the damage was in the 905, where it actually fell harder than Toronto. Detached homes in York, Peel, Halton, and Durham all came down around 8%, meaning your average suburban detached home that might have been 1.4 sold for 1.3. And townhomes in the suburbs were hit hardest of all, down 10% in some areas. That's why you're now seeing 3-bed, 3-bath townhomes with garage parking selling for under $900,000. That's something that may have felt impossible just a short time ago. And when we break it down by area, York region, York, Richmond Hill, Vaughan saw some of the steepest declines. Durham region held up slightly better, but that's because prices were lower to begin with. And Halton and Peel landed somewhere in the middle. All this being said, Toronto didn't win, it just fell less hard. Now, prices didn't fall like this without pressure, and that pressure came from inventory levels. Right now, Toronto detached homes are sitting with over 4 months of inventory. What that means is that basically 1 in 4 homes is expected to sell in any given month. Just a year ago, we were under 3 months. That shift matters because the higher inventory goes, the more leverage buyers have. And interestingly, entry-level semis and towns in Toronto are still sitting at closer to 2.5 months of inventory. Well-priced homes will get attention, and some buyers are being savvy and seeing the competition. But when you zoom out, we're still seeing inventory levels that we haven't seen in over a decade. The market simply just doesn't have enough buyers to absorb all the homes that are coming to market. And a lot of these unsold listings are rolling over into 2026. This is a stat that most people aren't talking about. By the end of 2025, we'll have roughly 13,000 unsold freehold properties. The end of 2024, there was only 10,500. That's a 25% increase in unsold homes, and they're not just going to disappear. A lot of sellers will just pull the listing instead of cutting prices. But those homes are going to come back on the market thinking that the spring market will bring everything back. Listing terminations were up significantly this year, meaning thousands of sellers tried, failed, and stepped back. And again, I bet we will see them come back to the market come spring. So that means that supply is up that's on the market, and there's also future supply sitting on the sidelines ready to come to market. Now, the market isn't broken because people can't afford homes. Affordability is actually up. The problem is people don't feel safe making big decisions. Job security feels shaky. Economic headlines are making people feel uncertain. And so buyers are being cautious. Right now, people that are buying are very financially secure, or they simply need to move. Their families are growing, they got a new job, etc. So until confidence improves, demand is likely to stay thin, even if affordability is growing on paper. The data tells us a nuanced story about what is actually selling. Because like I said, there are still people buying and selling. Some people have to based on life circumstances. And the homes that are selling are 10 out of 10 because median days on market is still relatively reasonable. So that tells us that. But average days on market are rising sharply because so many listings sit, relist, and become stagnant. That translates to good homes still sell, average homes sit, and overpriced homes just don't even get looked at. This is no longer the list and wait to see what happens market. So moving into 2026, if you are a seller, the reality is this. You're competing not only against price, but against choice. You must be strategic when you list. And if you're a buyer, this is the most leverage you've seen in over a decade. That is, as long as your finances and job stability are solid. And if you're just keeping an eye on the market, 2025 wasn't necessarily the bottom, but I believe it'll come out as the year that the illusion finally broke. If you'd like help understanding what this means for you and your specific neighborhood, or whether buying or selling even makes sense for you in 2026, I'm always happy to have a chat. There's a link below. You can book a call. Till then, I'll see you on the next one.